All right, welcome back to Lepus Research. Today, we are diving into a huge breakout stock, IPG Photonics, ticker IPGP. It just had a monster earnings report, sent the stock flying, and now we're going to break down the exact strategy for how to trade the pullback. Okay, before we get into the charts, you know the drill, but it's super important. This is all for educational purposes. A post-earnings move like this one is incredibly volatile. This is not financial advice, so you've absolutely got to do your own homework. So what kicked this all off? This number right here. IPG Photonics just dropped an 84% beat on adjusted earnings per share. That's a massive surprise that basically lit a rocket under the stock. Now, that earnings beat led to a wild 35% gap up in a single day. But listen, as traders, we know that chasing a move that's gone parabolic is a recipe for disaster. So the whole point of this explainer is to map out a smart strategy for trading the pullback, getting in at a much better, high-probability spot. Okay, so let's get some context here, because this wasn't just some random pop. This is a real-deal turnaround story that has literally been years in the making. So who exactly is IPGP? Well, they're the top dog, the global leader in high-power fiber lasers. You're talking about the tech used for cutting-edge manufacturing, medical gear, and even some pretty advanced defense applications. They're a really important industrial tech company. And this timeline, wow, it tells you everything you need to know. After peaking way back in 2018, the stock just got crushed for years. But the key is what's happening right now. You've got a new CEO, a whole new strategy, and boom, the first annual revenue growth in years. See, this isn't just a random spike. It's a fundamental shift, and that's what makes this technical setup so powerful. And the secret weapon hiding behind this whole turnaround, it's their balance sheet. It's an absolute fortress. I mean, look at this. Zero debt. None. Plus, they're sitting on $916 million in cash. That works out to about $21.75 per share just in cash. This gives them a massive safety net and tons of firepower to get this turnaround done right. That's a huge green flag for us. All right, so with all that background, let's get to the fun part, the actionable trade idea, the specific plan for how we could approach this as a swing trade. Here is the entire game plan laid out. And listen, rule number one, we are not chasing the stock up here. The whole plan revolves around being patient and waiting for it to pull back into our entry zone between $115 and $125. We've got a clear stop loss at 107, and our upside targets give us a fantastic risk-to-reward ratio, potentially as high as 1 to 4.5. This is the kind of setup we're always hunting for. Now, what you're seeing here is just the summary. We've put all the deep dive data, everything from who owns the stock to short interest, into a full, detailed PDF report. If you want to really dig in, the download link is right there for you in the description below. Okay, but no trade is ever a guarantee, right? So a good plan has to look at what could go right and what could go wrong. Let's break down the bull and the bear cases. So you've got this really powerful turnaround story on one side, but on the other, you've got the risks of a choppy market and a valuation that's gotten pretty stretched. It is absolutely crucial to weigh both of these sides. This is how we see the odds playing out over the next month or so. Our base case, which we're giving a 45% probability, is that the stock pulls back like we want, finds its footing, and then starts to grind higher. The key takeaway here is that even with a 30% chance of things going south, the overall mathematical expectation for this trade setup is still positive. But let's be really clear about the risks, because they are real. If the whole market decides to roll over, that's a problem. And stocks that gap up this hard, they can pull back hard. Also, and this is important, the PE ratio is way up there now, meaning the stock is pricey. These are serious risks, and that's exactly why our stop loss is not just a suggestion, it's a hard rule. So this all brings us to the actual execution. Successful trading often just comes down to knowing your levels and respecting them. These are the lines on the chart that you need to be watching. That 115 to 125 zone is our #1 support level and our ideal entry area. And if things go well, that recent 52-week high around 155 is the first big test the bulls are going to have to pass. Okay, let's wrap this all up. Let's get to the final verdict from our analysis and what the concrete next steps could be. So our conclusion is very direct. We think the setup is a buy, but, and this is a big but, only on a pullback into that key support zone. Chasing the stock way up here is not the high probability play. You have to be patient.
And I'm just going to say it one last time. Please remember, this is a high volatility name right now. This breakdown is purely for education to show you our process. Please manage your risk, do your own research, and never trade with money you can't afford to lose.
Hey, if you appreciate this kind of structured, no-nonsense trade analysis, the single best way you can support what we're doing is to hit that like button and subscribe to the channel. It lets us know you want more of these deep dives.
All right, now I want to hear from you. Are you watching IPGP? Do you think this turnaround story is the real deal, or is that valuation just too crazy? Drop your plan, your thoughts, your questions in the comments below. Let's get a discussion going.
Thanks for watching.